Hello and welcome. You're watching ET Markets. I'm Tanya Aneja. Well, we are seeing a tug of war between bears and bulls on the Lal Street. As an investor, you must be wondering where are the markets headed in the near term? Which are the sectors to bet on at this point in time? Well, to discuss this and much more, I'm going to be joined by a very special guest today. We have with us Yash Gupta, Equity Research Analyst at Angel One Limited. Thank you so much, Yash, for joining us on ET Markets.
It's my pleasure. Thank you.
The market has already corrected significantly from record highs. So, are we close to the bottom now? And where are the markets headed exactly in the near term, according to you?
In last 6 months, we have seen a huge volatility in the market, and those volatilities are due to different reasons, global as well as the domestic. If you look at on the global scenarios, the oil prices, the Ukraine war, the US inflation, those are the things which intimidate the market and not good for the market for the short term. And if you look at the domestic thing also, in the domestic market also, the inflation is at almost last 3 years high, which is above the limit of the RBI, which is 6%. So overall, the market has been hit by some negative news from the global as well as the domestic market. If we eliminate all these things, what we expect is that market has priced in all the negative short-term news. If any investor was looking to invest for the long term, it's a good time for the long-term investor. But still, we says that the short-term investor need to be cautious at this point in time also.
Absolutely. And where's the value emerging in these markets? I mean, which sectors are looking attractive, especially after the recent correction that we saw, and the sectors that could deliver better returns going forward?
If you look at last 6-9 months now, what happened is that FII selling is very huge. And in the FII selling, what has happened that some of the sectors like IT, BFSI, is sector specific selling from the FII has been huge. If you look at, we are overweight on the BFSI because what we believe is the trade growth cycle has now improved significantly in last 6 months, and we are expecting the trade growth cycle to continue. As well as if you look at last quarter results of the BFSI stocks, banking stock specifically, banking stock has reported 26 quarters highest profit in last 26 months, 26 quarters. Sorry. So I think that's the key trigger for the BFSI to move from here. And if you look at longer horizon also now, in last 8-9 years we have seen a cleaning up of the banking NPA cycles. So that's also a strong balance sheet with good numbers of profit along with the bank rate cycle. So three things comes together for the BFSI. So that's why we are bullish on the banking and the NBFC stocks. If I talk about other sectors like real estate, we are very positive on the real estate. We are out overweight on the real estate as well. We are underweight on the pharma. Looking at the price war in the US market, along with that the pricing pressure due to the raw material price hikes in the China and other sources, we are underweight on the pharma. Along with that, in the auto space, we are looking for the companies which are auto ancillary specific rather than the OEMs like Sona, BMW, and all those companies we like a lot, which are the bet with the EV also, along with the Indian cycle.
Absolutely. Any other sector that you would like to add?
If you look at on the consumer side, so consumer we are a little bit neutral as we have seen the pricing pressure is huge in the consumer sector. The companies are not able to take the price hike as the raw material prices hikes are there. So that's why we are a little bit neutral on that particular sector. As well as if you look at the cement sector, the new capacity, the war between the two giants is not looking good. So we are underweight on the cement sectors.
Absolutely. And also, Yash, any good buy on dips stocks that you would like to recommend at this point in time?
So basically, we generally tell our client to always buy in the proportionate, not to go and buy in the first go. So we are having a buy call on the Oberoi Real Estate, HDFC Bank, ICICI Bank. These are the stock which we look for the long-term investment horizon. As well as for the in the mid cap stock like Sona BLW, as I discussed, this stock is also looks very good for the long term prospect.
Absolutely. And what about the newly listed companies? I mean, if you talk about LIC only, it's down around 25% from its issue price. So, what would be your advice for the investors? And can investors expect the stock to cross the issue price soon?
So basically, the LIC was the good IPO, and the valuation they have traded it around to be 1.5 of the embedded book value. But along with it, there are some speculations going on regarding the embedded book value itself, and company will going to announce its embedded book value by the end of this month itself. So we are positive on the stock, and we look like next 6 to 9 months will be a good for the stock, and we are expecting it to touch the its issue price within next 6 to 9 months. So long-term investor can still hold the stock, but short-term investor need to be cautious and rather don't buy at this level. Whatever the stocks you have already, hold for those stocks. You may see within next 9 months your issue prices.
Absolutely. And what about the new age internet companies? I mean, shares like Paytm, Zomato, Nykaa, they have corrected significantly. So, do you think now is the time to step in, or one should avoid these stocks?
So basically, what happened, Tanya, all these new age companies are marked with the Nasdaq 100. If you look at Nasdaq 100 itself of the US company, the US Nasdaq 100 has corrected around to be more than 30-40% in last 6 months. And the same correction happens with our online listed companies. Some of the companies are down by 60 to 70%, some are down by 30 to 40%. What we believe that this is not a short-term story or a medium-term story. If any investor is looking to invest in this story, he needs to have a horizon of at least next 5 years down the line. So what we are saying to the investor, these are the risky companies. The success and failure ratio is very high in this type of industry. If we buy a particular like Oberoi Realty or the Shobha Developer, which are from the listed space, they are having the business onto it. They are in the market since last 20-30 years. They are having assets, they are having buildings, office space, and all those things. But in the online listed company, there are several competition has been increasing. They don't have any such kind of moat into their business. So that's why investors need to be more cautious on it, and don't look for some very like 6 month or 1 year time horizon. You need to have a larger time horizon of more than 5 years.
Absolutely, got that. So lastly, before we let you go, Yash, what would be your advice for all the first-time investors? I mean, any strategies that they should follow at this point in time, or any mistakes that they should avoid?
So first of all, the new investor should look for the long-term investing. Recently, when we interact with the clients, several of our clients are also having horizon of the very short term, like 6 months or 9 months. In last 2 years, we have seen good amount of money has been made in last 1 odd years because of the QE and after the COVID. And many of the new investors joined the market in that particular period. And there is the first bear market what they are seeing at this point in time. So new investors should look for the long-term horizon. Equity market has given a best return in last 20-30 odd years, whatever we have the data points. And along with that, it is able to beat the other asset classes like FD and all. So long-term investors should need to be focused on, and always don't buy on dips. Kind of study doesn't works in the market. Always buy in the proportionate, so that you have 3-4 different times to buy your stocks or the Nifty Bs or the Bank Bs. Small investors like who just want to invest like less than 1 lakh or 2 lakh of rupees, we generally advise them to look for the Nifty Bs or the Bank Bs, which don't have any stock specific risk, and it's just a bundle of Nifty and the Nifty Bank stocks.
Absolutely. On that wonderful note, thank you so much, Yash, for joining us today on ET Markets and being with us. Thank you so much.